Hello and welcome to another edition of Honeycomb Digital Investments Chain of Events. Today is October 19th, 2021, and my name is Baxter Hines. I am the Chief Investment Officer here at Honeycomb Digital Investments. And I want to talk today about a watershed moment for the digital asset industry. We have just seen the launching of a new ETF product based on Bitcoin futures. And this is a paramount moment for us because we have been for a long time waiting for the SEC to approve this kind of a vehicle. And ProShares has just started trading this new asset on the markets today. And so I want to analyze what are some of the ramifications for this kind of announcement. Overall, I would say it is very bullish in the long term for Bitcoin and other digital assets. And it really falls into the three major trends that I have been talking about for quite some time that are all positive for Bitcoin and other cryptocurrencies. And that is those three trends are: number one, we're seeing more adoption of digital assets. Number two, we're seeing better infrastructure that allow us to buy, sell, trade, report on whatever it might be on these assets, and that's very necessary for a thriving market. And the third thing is we're seeing more regulatory clarity. Well, this announcement today really does help with all of those aspects that create a better demand for digital assets. We've talked about many times on this and other series that we run and have video podcasts on about how Bitcoin has a fixed supply. Most Bitcoins you'll ever have is 21 million. And those three trends that I mentioned, again, adoption, infrastructure, and regulatory clarity, all bode well for an exponentially rising demand. And if you've got a fixed supply and exponentially rising demand, Economics 101 says that is positive for the prices of these digital assets. So let's just go into this in just a little bit more detail and see how an ETF does that. The first thing that I would say is that large pools of capital, primarily financial advisors, if you think of stockbrokers or people who help with wealth planning and wealth management for high net worth individuals and for people who are looking to find professional investment advice, talk about doctors, lawyers, small business owners, people who would use that type of a service. The gatekeepers, the financial advisors, need to have a product that will fit into their system. And having a tradable product that will trade on a major exchange like the New York Stock Exchange, the NASDAQ, whatever it might be, that is much easier for them to deal with as opposed to going out to opening up a Coinbase account or something like that. There's just not the connectivity built there yet to really facilitate that kind of a crypto transaction. So having this ETF structure really makes a huge difference. It's cost effective for the financial advisors to get into and put their clients' money into Bitcoin. It's easy to do. It's quick. It's something that can easily be put onto financial statements from the brokers or other consultant to their end client, and you get valuations and familiar accounting types of principles. All of that is vital for the adoption of these cryptocurrencies to a broader swath of investors. Now, let me take another quick step back and say that the nature of this product is not exactly what the market has wanted, in that it is catering to futures contracts as opposed to spot Bitcoin. Now, there's a subtle difference there. The Chicago Mercantile Exchange has had Bitcoin futures for quite some time now. I believe that started in 2019, and this new ETF product will hold those futures contracts. So this is positive, but again, a spot Bitcoin ETF would be better, I think, in the long run, but it doesn't preclude us from getting there at some point in the near future. The futures contracts are very interesting in that they do allow for some of the speculation in the market to go away. And what I mean by that is there's a lot of leverage in the traditional Bitcoin markets. People will borrow money. They'll go out and buy Bitcoin, sometimes as high as 100 to 1 leverage I've seen. When you have a futures market, you can take some of that speculation out, because if the futures curve is positively sloping, meaning out in the future, the price of Bitcoin is higher than it is today, people can lock in those kinds of gains and therefore have a less speculative kind of market. If you know the future is going to pay you out, let's say at 60,000, today Bitcoin's trading at 55,000, you can lock in those gains over time. That's not as speculative. It allows traders to make a riskless type of profit, and that leads to a healthier kind of market than one where the volatility of the market can shake people out. If your asset Bitcoin is denominated in the same currency as your future, in this case Bitcoin, you don't have any problems. If the Bitcoin's denominated in dollars and Bitcoin plunges in value, you're going to have a margin call, and that's going to create forced selling. This type of product helps to eliminate some of that speculative force in the marketplace. So that, I believe, is good for the overall market. The other thing that I would say, just from a big picture standpoint, is that the market has been looking for an ETF for a long time as an additional source of demand. And historically, when you have a commodity that is put into an ETF, the value of it goes up. So when gold got created into an ETF product under the ticker GLD, the market cap of gold was around 1 trillion. And over time, the market value of gold went to about 12 trillion. Now, is that exactly what's going to happen with Bitcoin? Only time will tell, but it does create a much easier way for investors to get access to a commodity like gold or Bitcoin. And so it's ultimately very bullish. If you think about gold, in terms of a financial advisor or a broker, how are they going to buy that for their client if it does not have an ETF? They're not going to go out and buy gold and put it in a safe and sell it at a later date. There's just too many frictions involved in those kinds of transactions. And it's too expensive. It's too dangerous. You want something that facilitates all of that, and an ETF does it. So I think that is all very positive for gold and for Bitcoin, and it will ultimately also lead to higher prices of the altcoins like Ethereum and others, because as Bitcoin goes higher, the market inhales that new capital from the general marketplace, and then it typically exhales it into the altcoins. That's the way I often think of it, and so that rising tide lifts all boats. Another thing to think about is that from a regulatory standpoint, if the SEC is comfortable approving an ETF for the futures contracts, it's probably likely at some point to do it for the spot markets. In fact, I saw this morning that Grayscale just put in an application to convert its flagship product, the GBTC, or the Grayscale Bitcoin Trust, into an ETF. Now, they've been trying that for a long time. I think the regulators will drag their feet in approving another product. They'd like to see how this futures contract ETF performs. One of the issues that I would point to that gives me a little bit of skepticism behind this type of move is that futures contracts on certain commodities have been less than perfect in terms of tracking the price of the underlying commodity. Primarily I would point to the oil and gas industry. You've seen ETFs that try to track natural gas prices, and it just doesn't work as well as it would in theory. There's just too much slippage, there's front running, and I think that is going to be a reason why the SEC is really going to watch how well this ETF represents Bitcoin, which is ultimately what the underlying investor is looking for, before they approve something that is bigger. And it's just going to be a matter of time to see what happens. I've said it before that I believe that in the long term, this is very good for Bitcoin prices. It just creates more demand. In the short term, though, there's been a lot of speculation already leading up to whether or not an ETF is going to be approved. So you may already see this news priced into the market. I don't know if you'll see additional upward pressure on the price just because of this. It may come from other forces. Only time will tell. But in general, this is really a good improvement for the overall health of the Bitcoin and cryptocurrency markets. And I think it's just a sign of more things that will come. We are seeing so many different reasons as to why cryptocurrency is being adopted as a new asset class. We at Honeycomb Digital, we truly believe that this is the biggest technological innovation for our society since the internet, and we believe it will especially have major ramifications on the financial markets and the financial industry to create a better, faster, cheaper way of transferring value and information through the blockchain as opposed to the paper-based and antiquated systems that we have today. So we are very excited about it. We'll keep you posted on other events as they unfold. I thank you for your time and look forward to seeing you on another episode of Chain of Events. Thanks so much.